Where does Iran earn from? The complete story of an economy shaken between war, sanctions, and a power crisis. The morning in Tehran had not even fully awakened when a piece of news shook the entire country. The government television broadcast suddenly changed, the anchor's voice was heavy, and there was a strange pause in the words. It had been confirmed. Supreme Leader Ayatollah Ali Khamenei had been killed in attacks by Israel and the United States. There was silence on the streets outside, but chaos on social media. People were asking just one question. What happens now? The fire of war was already burning, and now the country's highest leadership was gone. Can Iran's economy withstand this double shock, or is it truly standing on the brink of collapse? When the most powerful person in a country suddenly disappears, the impact is not limited to politics. It reaches the currency, the markets, trade, and even the daily bread of ordinary people. Iran was already struggling for years under American sanctions, the uncertainty of the nuclear deal, and regional tensions. But now, the recent attacks have directly targeted its military bases, refining centers, and strategic infrastructure. In such a situation, it becomes extremely important to understand where Iran earns from, what the real source of its treasury is, and which sectors are at stake in this war. The backbone of Iran's economy is its oil and natural gas reserves. It is counted as holding the third largest proven oil reserves in the world. It has more than 209 billion barrels of crude oil reserves. In addition, it is also among the top countries globally in natural gas reserves. More than 80% of Iran's foreign currency earnings are directly or indirectly linked to crude oil exports. This is the money with which the government runs a major part of its budget, provides subsidies, funds the military, and pushes forward development projects. However, Western sanctions have seriously affected this income. In 2018, when the United States withdrew from the nuclear deal and reimposed strict sanctions on Iran, its oil exports saw a sharp decline. But Iran found alternative routes. China emerged as its largest buyer. According to several reports, around 80 to 90% of Iran's oil exports have been going to China in some form. Apart from this, countries like Turkey, the UAE, and Iraq have also remained trade partners. In 2024, Iran's total exports were estimated at more than $22 billion, with oil and petrochemicals making up the largest share. But in a war situation, the first threat is to these very oil wells and refineries. If refining centers or transport pipelines suffer serious damage in airstrikes, oil production could stop. And if oil stops, the flow of foreign currency will also stop. This is the fear visible in Tehran's markets today. Experts believe that if production remains disrupted for a long period, Iran may not even have sufficient funds to continue fighting the war. Apart from oil, the second major pillar of Iran's economy is its mineral and industrial sector. Iran is a large producer of minerals like copper, iron ore, and zinc. Its steel industry is considered strong at the regional level. Iran has been among the top steel producers in the world, and this industry plays a crucial role in both domestic employment and exports. But in wartime conditions, logistics are disrupted. Power supply gets interrupted, and heavy industries can come to a halt. If the electricity grid is attacked or the transport network breaks down, the steel and mining sectors could suffer major losses. Another complex and less understood part of Iran's economy is the economic empire of the Islamic Revolutionary Guard Corps, or IRGC. The IRGC is not just a military institution. It has deep stakes in construction, infrastructure, telecom, banking, and energy projects. Many large government projects have been directly or indirectly linked to the IRGC. Since the IRGC is playing an active role in the war, its economic establishments are also under threat. In the absence of Khamenei, the balance of power within the IRGC could shift. If internal struggles over leadership begin, the impact will not only be on the military front, but also on economic decisions. Foreign investment was already limited due to sanctions. Now, if political instability increases, even the little economic stability that remains could disappear. Iran's currency, the rial, was already weak, and after recent events, its condition has worsened further. In the international market, the value of the rial has been continuously falling. Inflation has been reported between 40 to 50%, reducing the purchasing power of ordinary citizens. The prices of everyday goods have already risen. After news of war and leadership crisis spread, panic has increased among people. Crowds are being seen outside bank branches, people are withdrawing cash and investing in gold or foreign currency. This situation could turn into something like a bank run, which is a dangerous signal for any banking system. In addition, Iran has tried to develop alternative trade routes, such as the INSTC corridor and partnerships with China, to reduce the impact of Western sanctions. But when political stability within the country itself is under question, even long-term trade agreements become uncertain. International companies avoid taking risks in such an environment. The subsidy system is also a major factor in Iran's economy. The government has been providing heavy subsidies on petrol, bread, and certain essential goods. But when foreign currency decreases and pressure on the budget increases, it becomes difficult to maintain these subsidies. If the government is forced to reduce them, social unrest could rise further. In the past too, increases in fuel prices have triggered nationwide protests. The impact of war is not limited to industry and exports. It also affects education, healthcare, and social services. If government revenue declines, funding for these sectors may decrease. Even earlier, due to sanctions, the supply of medical equipment and medicines had been affected. Now, if the economic crisis deepens, ordinary citizens may face even greater hardships. In this entire picture, the biggest question is whether Iran will be able to restructure its economic framework. Will it be able to reduce its dependence on oil? Or in the coming years, will it face an even deeper economic crisis? History has witnessed that even resource-rich countries, if entangled in political instability and war, see their economies shaken. The silence in the streets of Tehran today is not just of mourning, but of an uncertain future. People want to know how their children's education will continue, what the price of flour and rice will be in the market, and whether stability will return to the country. The black gold flowing from oil wells is both Iran's strength and its weakness. As long as it flows, the economy keeps running. But if the fire of war stops that flow, the crisis can deepen. What the new balance of power will be after Khamenei's death, only time will tell. But one thing is clear. Iran's main source of income is oil and gas, and they are under the greatest threat right now. Mining, steel, banking, and the IRGC's economic network are also shaking in this storm. War, sanctions, and leadership crisis. Together, these three have brought Iran's economy to a point where every decision will shape the future. And perhaps that is the greatest fear in this story. Is this just a temporary shock or the beginning of a major economic earthquake? The answer is still hidden in the fog, but the world's eyes are fixed on Tehran.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.